happy Friday, everyone. It's me, Buffy. Thanks for joining me here again today. And welcome to our second January weekly Market Insight episode of the new year, which is coming directly from the Capital Markets Trading Desk at Sunwest Mortgage Company. All right, let's get into the world of news, shall we? So I've heard that a rally driven by optimism over China's economic reopening has fizzled as the data which came out recently signals a slowdown. Stocks slipped this shortened week as we celebrated Dr. Martin Luther King Jr.'s birthday, yet it has been a busy week nonetheless. Filled with various U.S. corporate earnings reports, many economic data releases came to an end. The mixed earnings and signs that central banks may turn more hawkish have also set up a tone for traders this week. Over 40 companies on S&P 500 that have posted earnings so far, 25 have beaten analyst expectations. However, major U.S. banks have reported a larger than expected drop in profits. The dollar fell versus major peers except the yen. In spite of all of this, St. Louis Fed Chief James Bullard and Cleveland Fed President Loretta Mester stressed the need to keep policy restrictive for longer. Federal Reserve Bank of Boston President Susan Collins said she favors a more moderate pace of interest rate increases, even as the central bank continues to tighten policy to reduce high inflation. Investors are now focusing on indicators of growth and inflation to assess when exactly the Fed and other major central banks would stop their interest rate increases. So, do you want to dive in and learn more about what's happening in the market? All right, you got it. Oil futures headed for a ninth day of advances on optimism that Chinese demand will recover rapidly following the abandonment of COVID-0. Iron ore rose for a second day amid China's improving economic outlook. West Texas Intermediate crude rose 1.6% to $82 a barrel. U.S. producer prices dropped in December by the most since the start of the pandemic, giving the Fed room to slow the pace of interest rate hikes. The producer price index for final demand fell 0.5% last month, the most since April 2020, and was up 6.2% from the year earlier. The Federal Reserve Bank of New York's General Business Conditions Index decreased nearly 22 points this month since the early months of the pandemic as new orders and shipments collapsed. Meanwhile, applications for U.S. unemployment benefits unexpectedly fell last week, sliding to the lowest level since September, underscoring a strong jobs market where many businesses are reluctant to let go of workers. Initial unemployment claims decreased by 15,000 to 190,000 in the week ending January 14th. Tell me one thing, did you stop going to the malls and shops? Let me tell you why I ask. U.S. retail sales fell another 1.1% in December, a level more than expected after a 1% drop in the prior month, igniting worries that the aggressive tightening could tip the economy into a recession. So what else is around the globe? What's happening? Let's find out. The top U.S. and China economic officials held their first face-to-face meeting Wednesday, pledging to improve communication as a way to avoid more serious confrontation during a period of heightened tension. China's economy proved more resilient than analysts forecast as a virus wave swept the nation, suggesting the worst of the slump may be over as challenging recovery begins. European Central Bank Chief Economist Philip Lane said interest rates will have to move into restrictive territory to bring inflation back to target. The World Economic Forum's annual meeting kicks off in Davos, Switzerland, with speakers including European Central Bank President Christine Lagarde and the International Monetary Fund's Kristalina Georgieva. Let's now get into how the housing market is doing. U.S. mortgage rates fell to a 4-month low last week, supporting more home purchasing and refinancing. That helped boost total applications by nearly 28% in the week. MBA's purchasing and refinancing indexes each rose to the highest in September. New U.S. home construction declined for a fourth straight month in December, wrapping up a disappointing year for an industry that saw annual housing starts fall for the first time since 2009. Residential starts decreased 1.4% last month to a 1.38 million annualized rate, a 5-month low. New construction fell 3% in 2022 after surging the prior year. The December drop was due to a slump in multifamily projects. New orders dropped nearly 28 points, also the lowest since May 2020, and marking the third straight month of contraction. Factory employment fell to its weakest level in more than 2 years, indicating that hiring has essentially stalled. Okay, so now let's wrap it up. Reports from the U.S. this week showed declines in consumer demand and business investment, boosting the probability of a recession in the world's largest economy. That, however, didn't deter Federal Reserve officials from reaffirming the need for tighter monetary policy. So, the Fed is again meeting on January 31st and the 1st of February. The central bank is expected to slow its pace of rate hikes to 25 basis point increase this time. Let's continue to keep an eye on how the market responds, shall we? Okay, so that's it for now, everybody. Until we meet again, stay updated with our news, and our trading desk will keep you informed with pricing incentives. Have a great weekend. Buffy, out.